The importance of U.S. beef exports to the cattle markets has been well documented. So how are export markets shaping up so far in 2016, and what can we expect for the rest of the year? Joining us now to discuss these issues is Marcus Bricks of CattleFax. Marcus, we've talked a lot on the show about the important role exports play in the U.S. cattle industry. How much value are exports adding right now?
Well, last year in 2015, our total beef exports, including the protein, variety meats, tallow, hides as well, brought about $7.5 billion to the industry. Now, across the 23 million head of cattle that we steers and heifers that we slaughtered last year, that would be about $327 per head of export value. And that has declined some from the peak we saw in late 2014, but it is still high considered against other recent years.
Yeah, pretty considerable impact. And we hear a lot about the global markets right now, the global economy.
Sure.
What's your read on the global economy, and how much of an impact is that having on beef cattle markets?
Well, I think a word that sums it up pretty well is uncertainty. You know, last year we saw a lot of panic. Global equity markets declined very heavily. The Nikkei index lost almost 30% from its peak to its low earlier this spring. The Shanghai index in China lost a considerable amount as well, almost 50% of its value. But at the same time, you know, that may look a little bit of a panicky situation, but commodity values aren't driven by global equity markets. They're driven by long-term growth, and they're driven by growth in economics and income as well. So right now, the IMF forecasts are still supportive, really, for our forecast going into 2016, 2017. Right now, I believe the world forecast is somewhere between 3 to 4% GDP growth on average, and then in terms of our emerging markets, you know, the ones that actually have a growing income and are slowly developing a larger demand for beef, the GDP forecast for those countries is somewhere between 4 and 5%, so supportive.
So it is encouraging news as we look longer term, it sounds like.
Absolutely, sure.
Yeah. You know, anybody that's sold cattle recently know that we've certainly come down from the highs that we were experiencing, and it's a lot different picture than it was a year ago. What are some of the other factors that are contributing to this?
Well, really, when you think about it on a kind of a long-term supply and demand perspective, with the amount of beef we produced last year, about 55 pounds per capita, it's really kind of in line with the long-run supply and demand curve. Prices this year, we're expecting to average roughly $133 per head for a fed animal, which really kind of makes sense historically. The biggest supplies last year were coming out of our additional competing meat supplies. We had a really strong dollar, which ended up lowering our beef exports last year about 13%. But what surprised us really fully was our poultry exports were down about 13% as well. Wow. So at the end of the year, we were forecasting about a 7 pound meat and poultry supply per capita. But what we ended up with was something closer to 10 pounds per capita, and about 7 pounds of that came from poultry. So really, we just had a huge rise in the amount of competing meats, and just kind of brought our price level down in general.
So Marcus, specifically what countries are making up the bulk of our exports right now?
You know, historically our largest beef export destination is Japan. This year, on a weekly basis, our exports are up about 11% year to date, and they're up about 11% year to date to South Korea as well. And this year in 2016, those two are really going to be our growth countries, predominantly due to the fact that our competing suppliers of beef into those countries, mainly Australia and New Zealand, are facing a drought situation really for the last couple of years, which has led them to an aggressive cull rate and slowly declining supplies. So really, we'll have more available product to ship in a situation where they won't. So where we're typically fighting for that market share, we'll be in a much more supportive position this year. Also, one of our large purchases of beef, Mexico, have kind of been in an interesting situation in the last couple of years. With the strength of the U.S. dollar, they've actually switched from buying a less percentage of our beef and more of our pork products, mainly hams. And so last year, really for the first time in about 20 years, Mexico was a net importer of beef to the U.S. as opposed to a net exporter. And likely that trend will continue this year as well.
One last question for you, Marcus. As you look ahead to the second half of 2016, what do you expect both in terms of export volume as well as value?
Sure. Well, right now on a weekly basis, we're about down 3% year to date in terms of beef exports. The first half of the year data is always a little bit hard to kind of move through because you get a lot of commitments in the first half, and then maybe some are a little bit slower to export that product. So right now our beef commitments are supportive. Our current forecast for the rest of the year, we think that we'll finish up about 3% over last year. And then in terms of what that means for export value, it will be a little bit lower than last year as well because that beef will be exported at a lower price.
Sure.
So right now we're thinking about roughly $300 per head for a fed animal.
Very good, but still very significant and a very important piece of the puzzle.
Absolutely.
Thanks so much for coming and sharing your perspectives with us.
You bet.
Want to keep up on all the latest news in the cattle industry? Just visit NCBA's website at beefusa.org. And for more expert analysis on the cattle markets, be sure to visit CattleFax.com.